I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome to the show, John.
Hey, Jim. Kind of an eventful couple of weeks since we talked last, huh?
Yes, and I was going to ask you if the events in Paris have affected the stock markets at all.
Yeah, they made the U.S. markets go up, which isn't what you would expect if you were just looking at geopolitics, you know. But in the financial markets now, events don't matter. What matters is the reaction of central banks to events. So the perception now is that it's going to be harder for the U.S. Fed to raise interest rates with Europe aflame and you know, a coalition now invading the Middle East once again, you know, and so that kind of leads to easy money. And the markets like that, so stocks went up, you know. So it sounds kind of amoral for the stock market to do something positive in the wake of a tragedy like the Paris attacks or the Russian plane that was blown up in midair. But that's how markets work now. You know, we're basically creatures of the central banks. We exist in order to follow what the government fiscal policy and central bank monetary policy is doing. And fundamentals don't matter anymore. Geopolitics hardly matter anymore. What matters is how much easy money is going to be flowing out of the central banks in the near term. And, you know, it looks like the Fed is going to have trouble raising interest rates and trouble continuing to raise interest rates in the face of what's going on. And it looks like the ECB, the European Central Bank, almost certainly has to liquefy in some way, either a newer, bigger QE program or some kind of a debt forgiveness program or some kind of massive increase in government spending. You know, they've already suspended the Eurozone deficit requirements for member countries in order to let them handle the flood of refugees coming from Syria and now to gear up for war in the Middle East. So we're seeing stuff like what you would expect from the world's central banks and governments in the face of a crisis. And the market's like that. So that's why U.S. stocks are up right now.
That's incredible how you'd think it would be the other way around. On the other hand, though, whenever there's conflict, don't banks like that because then they can charge more for things?
You know, the banks are kind of in even though they're not making huge amounts of money right now, they're still in what is theoretically a very sweet place where they get free money from the government. And if they want to lend it, whatever they lend it at is going to be more than free, right? So they're making money, and the big banks, especially the big U.S. banks, because they're so dominant, you know, there's only like 5 or 6 banks here that own most of the financial market, and they tend to monopolize or they at least have oligopolies in a lot of the big markets. And so, you know, if they're lending against houses, you know, they're writing mortgages, and the mortgage rate is 3%, and the government's giving them free money, it's a pretty nice spread. So they're doing okay. And they don't like instability because it makes it hard for them to plan ahead. And it also makes it hard for their trading desks to make money. And that's where a big part of the money of the big banks come from now. They have their own guys sitting at desks and manipulating / betting on markets out there. And to the extent that they can manipulate markets by pushing them around and getting them to do what they want, then they make a lot of money. You know, Goldman Sachs, for instance, has had long stretches where they made money every day, you know, whole month where the trading desks are profitable. And since that's kind of a zero-sum game, you know, they're up against all the other big trading desks, it's highly unlikely that would happen through skill. But it's possible that a big bank can manipulate a market and continue to make money at it. But in a really unstable world where things are blowing up out there and planes are falling from the sky and governments are declaring war on each other, that's harder for banks to manipulate, because these big events tend to swamp whatever their trading desk is doing. And so that's what the banks don't like. They don't like this kind of instability. They like stability or instability within ranges that they can manage. But once it steps out of that range, they have trouble making money because they're in the same boat as everybody else. They're just guessing about what's going to happen next. And so you're seeing the bank trading departments make less money now. So they would love a return to relative stability where they can do their thing. But it doesn't look like they're going to see it, though. It looks like things are just going to get crazier from here, because the flood of refugees into Europe is not abating. And the number of countries that are spinning out of control in the Middle East isn't going down. It's only getting crazier over there. And then you've got the energy market where oil, West Texas Intermediate, which is what the U.S. uses as its oil benchmark, hit $40 this last week, which is a multi-year low. And that is destabilizing for all the junk bonds that are out there in the energy patch. The crappy debt that was taken on by frackers and other people in the energy markets who now is underwater, now are underwater. And they can't pay their bills with oil at this price, so you're going to see a lot of bankruptcies in the year ahead, and that's destabilizing too. So, it goes on and on. Emerging markets, for instance, now have $9 billion of dollar-denominated debt, U.S. dollar-denominated debt, and the U.S. dollar just hit a multi-year high. That's bad for that debt too. So 2016, we'll see a lot of explosions in the financial market where big companies or whole countries either default or look like they're going to default and then take really extreme steps to avoid it. And that's destabilizing. So I think all you can say with any kind of certainty about 2016 is that it's going to be a chaotic year, and that that's generally bad for most of the big financial players.
Of course, when you say the big players are manipulating the markets, when you have billions of dollars to throw around every day, it's pretty easy to do that, isn't it?
Well, it has been easy for these guys. You look at the number of markets that are manipulated, it's pretty much all of them. And there are ongoing lawsuits and lots of big settlements being announced all the time. And basically what the banks do is they manipulate markets, they commit crimes out there, and then they eventually know they're going to have to pay a fine, but they count that as a cost of doing business. It's a fraction of the profit that they made. None of their people go to jail. And none of their people are even named as criminals. They just go on as they were before, making huge amounts of money. And that's a sign of how totally the big banks have come to dominate the financial system. It's now being tossed around out there that early in the Obama administration, the Attorney General announced kind of a doctrine, which was that they weren't going to go after major corporations because that's destabilizing to the financial markets. So if a corporation, and it turned out to be mostly the big banks because they were the ones committing most of the major crimes, commits a crime, and the regulators have to feel like they do something, that they have to do something about it. What they do is they negotiate an agreement in which the bank pays back some of the money that they made, but doesn't admit any kind of wrongdoing. And so, in effect, what Eric Holder, the Attorney General, was saying was that the too big to fail banks are bulletproof. They're above the law. And so, of course, in that kind of a circumstance, the banks are going to do whatever they can to make money, even if it means committing crimes. They consider that their fiduciary responsibility to shareholders to maximize their profits. And if the government sets up an environment in which crime pays, then of course they're going to commit crimes. Because if they don't do it, if J.P. Morgan Chase doesn't launder money and manipulate markets, then Goldman Sachs will. And Goldman Sachs' profitability metrics will be higher than J.P. Morgan Chase's. And the board of J.P. Morgan Chase will call Jamie Dimon in and tell him either he shapes up or they're going to replace him with an executive vice president from Goldman Sachs. So, in effect, in monetary theory, there's this thing called Gresham's law, which is that bad money drives good money out of circulation. If you have dollars and gold coins, you're going to spend the dollars and keep the gold coins, right? And the same thing is true in banking, where easy money, in an easy money environment, bad bankers drive good bankers out of the market. And that's the way that process works. You either get with the program and become essentially a white-collar criminal, or you're flushed out of the business because somebody will come along who's willing to do that and they'll make more money than you. And that's our world now. So, yeah, we shouldn't be surprised that we have this world because we set up the conditions in which it became inevitable.
Well, HSBC has been caught laundering money. There was a BBC documentary where they followed $3 million from Europe to England, and an HSBC bank just said, well, we can't give you the cash outright, but go over to this branch across the street. And the guy just walked out with a briefcase with $3 million in it, nothing declared to customs or to revenue. BBC caught, I think, close to 2,000 people doing that. 3 people were questioned. They had the evidence. They had it on video. Nothing happened.
Yeah. How many of those people are doing perp walks to prison now? Probably none at all. And how many are still working at their old jobs making lots of money? Probably most of them.
Yeah, so far the only country that's prosecuted the banks for wrongdoing and put people in prison is Iceland. And as we know, Iceland has such a huge impact on the international banking business.
But you know what? They're really the bright light in this whole thing. They did what you should do in this kind of a circumstance. And they're not in bad shape now. Their economy is actually in better shape than certainly most of the Eurozone, and soon most of North America. So I think that eventually we'll get to the point where somebody gets elected on a platform of locking the bankers up, and they'll go back and root through a lot of what happened, and statute of limitations permitting, they'll put some of these guys in jail, but it'll be far too late to have affected the behavior of anybody today.
Well, in Canada, there is no statute of limitations when it comes to the Criminal Code of Canada. So if you committed a serious crime today and they don't catch you until 50 years from now, you still go to jail. Although you may not serve a long sentence because you're not going to live that long.
Yeah.
I mean, why they put statutes of limitations on anyway? Like New York, if you haven't been charged with a murder for 7 years, you walk away. Why is that?
Yeah, I don't know. I'm sure there's a rationale for it, so that somebody doesn't end up looking over their shoulder forever. But you know what? You commit a crime, you should look over your shoulder forever.
They should. That's the whole deal. They should. And who was the politician who committed a murder and thought, if I can get away with it for 7 years, I should be able to walk?
Yeah. And I don't know. I don't know what the rationale for it is. And in the case of financial crimes, it's hard to understand why there should be something like that. I don't know what there is in the U.S. I don't know if J.P. Morgan Chase is on the verge of skating for what they did in for instance, the housing bubble. I don't know. But I don't think it really matters effectively because we're not going to prosecute these guys unless we elect somebody like Bernie Sanders, which is almost vanishingly unlikely, because it's fun to watch these politicians, like Ron Paul, for instance, at the other end of the ideological spectrum, stand up to the big banks and say these things. But push comes to shove, the amount of campaign financing cash that's on the other side makes it almost impossible that anybody who's willing to stand up to the big banks gets elected. In the U.S., we have one politician, Senator Elizabeth Warren, who might have a chance because she's a high-profile, very publicly attractive senator. She's articulate. She's, I think, a Harvard professor before she ran for the Senate. And she puts things in terms of protecting the little guy from the big bank. She runs or helped found our Consumer Finance Protection Agency here. And so that might do it. If she were to run, she would have a chance. And then the question would be, can she get anything done in the face of a Congress that's still been elected by the big banks? It's possible that she'd be president, but she would be completely impotent. And I don't know about that, but she's not running. So the odds of anybody who is now in the race going after the big banks and doing an Iceland in the U.S. is vanishingly small.
We'll have more with John Rubino right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with John Rubino. John, when is the U.S. dollar going to stop this skyrocket climb?
Yeah, the dollar is not far from parity with the euro, which is a huge change from recent years. And it's way up against the Canadian dollar, right? I haven't seen that figure lately, but I assume that visiting you would be pretty cheap this week.
Oh, yeah. Please visit.
Yeah. But what's happening is the rest of the world is in such horrible shape that money's flowing into the U.S. for safety's sake. You know, we're now a safe haven, because we're perceived to be far from the action in a lot of bad ways, or far from a lot of the bad action that's going on in the world. You know, we're a long way from the Middle East. We don't have Europe's immigration problems, and we don't have the Eurozone's fatal flaw, you know, and so you don't look at us and think, okay, there's an immediate crisis about to happen here. All you do when you look at the U.S. is say, wow, these trends are unsustainable. But they might be sustainable for another 2 or 3 years. And if you're moving money around the world, trying to decide where to park it for safety, 2 or 3 years sounds pretty good. You know, if you've got money in Brazil, which is absolutely cratering right now, or Europe, which is, you know, a fire beginning at one side and sweeping across the continent. And of course in the Middle East, you know, if you're a Saudi right now, where would you put your money? The U.S. seems like almost the only game in town, and so that's boosting the dollar. But a high dollar is causing us problems right now. Already, a lot of our major corporations are reporting subpar earnings because the dollar is making it harder for them to sell stuff abroad. You know, a strong dollar increases the price of whatever you're selling to the rest of the world and lowers your sales, other things being equal. And so let the dollar go up from here, and you'll see another year of really bad corporate earnings, which then would bleed over into the stock market, right? I mean, corporate earnings are what underpins equity valuations. So let corporations continue to have trouble, and you'll see stock market problems that bleed over into the main economy. You know, you'll see a cascade failure of this financial system if the dollar gets too much stronger. And so this is a short-term trend that has a natural limit built into it, and that is that when the dollar hits a point where it hurts more than it helps, it'll have to stop going up. And we don't know where that point is. Like any big, long trend, you can't call the turn with any kind of perfection, but you can see when the trend is running out of steam. And we aren't really there yet because the world is in such chaos. But at some point in the not-too-distant future, and I think 2016 is a pretty good candidate, a strong dollar becomes a problem. And we have to start looking for a solution to that problem. And the only solution to a too-strong currency is to devalue it somehow. Historically, when countries were finding themselves on the losing end of a currency war, in other words, where their currency got too strong and it started to become a political problem for the guys in charge, they've devalued their currencies either by ramping up government spending and borrowing what they need to cover their deficits, or cutting interest rates, or lately buying back bonds with newly created currency. That's quantitative easing. They'll do some combination of that here. So all this talk about the Federal Reserve raising interest rates is really this tiny little blip in the long-term decline in interest rates and the long-term increase in outstanding debt in the U.S. and the rest of the world. So in 2016, we'll see a swing back in the other direction, where the economy is such a mess and it's bleeding over to the U.S., and we find that we have no choice but to do some kind of liquefaction of the financial sector again, and so we'll do something. And I suspect it's going to focus on interest rates this time around, where they push interest rates down into negative territory. And so the U.S., along with most of the rest of the world, will have negative interest rates out to 5 years or 7 years or even 10 years. And in order to make that possible, we'll have to declare war on cash. In other words, we'll make it harder and harder for people to transact and save with paper money, because that short-circuits the process of pushing interest rates down. You know, if you can just put dollars under the mattress, then you don't have to worry about losing money on your bank account. And once interest rates get sufficiently negative, lots of people are going to choose that alternative, and that'll empty out the banking system and mess up the financial markets, and so governments will have to do something about that. So they're already in various countries trying out different laws to see what works and what doesn't. So 2016 will be a year of experimentation in the war on cash, where different countries try different things, and they see how well it works. And the end game will be the complete eradication of paper cash in favor of electronic money. You know, and there's a headline just out there somewhere today that it's a totalitarian nirvana when we have a world of just electronic money, because that means governments can track everything you do. They know where all your liquid wealth is. They know what you're doing with it. They know where you are at every minute of the day. And so because of that, they have total control over you if they choose to exercise it. So the war on cash is just one more step in that process that began with the Patriot Act in the U.S. and has extended through all kinds of new surveillance technologies and court rulings and various kinds of laws that allow the major governments of the world to basically watch you 24/7. And these attacks in Paris are one more impetus for that, because now the spy agencies of the world are saying, well, look, we can't have strong encryption on private data that we can't get to, because then these kinds of attacks will get easier and easier to do. People will be able to communicate before the attack and coordinate it without us being able to catch them. So if you want us to catch them, if you want to protect your children, you have to let us see all of your emails and all of your financial transactions in real time. You know, you just have to do it. And a sufficiently terrified populace will go along with that. So it's not clear that the Paris attacks are sufficient for that. But if they're not, you know what? We'll see another attack and another, and until people just give up and say, look, do whatever you have to do, all right? Just do it. Just stop this. Stop the bleeding. And so at that point, the world becomes a very scary place for anybody who isn't completely on board with whatever the government's doing in the moment, because the government can see exactly what you're doing to try to change things. And if they don't like what you're doing, they can suck all the money out of your bank accounts or trump up charges in other ways, and in that way punish you, and you won't have a thing you can do about it. So yeah, it's a scary world that we're creating out there, and there really doesn't seem to be a coherent solution, because the world is really spinning into chaos, beginning with the Middle East and Europe, but also Latin America and parts of major industries in the rest of the world. And so a chaotic world is a world in which strong government is welcomed eventually. So we're heading that way, and there doesn't seem to be anything to slow it down at this point.
John, thanks a lot for chatting with us.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.